Um, Started with about 30 grand at 2018, and now I'll be retiring, fully in 2 years, living off 100% of my dividends. So it took a lot of luck, took a lot of perseverance, a lot of learning really quickly, and then motivation, to make sure that my family's taken care of and that I can get out of this rat race. So money is a motivating factor, but family is a bigger motivator.
That's good to hear. Congratulations on that. That's good. It's hard to get going, but once you get going, it happens pretty quick.
Yeah, I'm in the construction business. In 2008, the business dropped out. I lost about 99% of my clients. I spent from 2008 to 2018 getting out of debt. And then once I got out of debt, 100% of everything extra went into my investments. There was no looking back because I didn't like where I was at in 2008. I had to take on debt just to survive, and it's not fun paying it all back. So once you see the positivity of your actions and the direction that you're going, and seeing the accumulation, and especially with dividends and the compounding effect, it's it's exciting. It's a lot of adrenaline, and then once you get a certain amount in the market, 0.5% or 1% gain is a lot of money. And I'm blessed. I'm fortunate. There's a motorcycle passing. Yeah, I'm just blessed, and um, yeah, that's where I'm at.
Hey, that's what I love to hear, man. That's dope. And yeah, there's no feeling than when no better feeling than when them dividends hit for sure, man. That's definitely one of the most motivating things is seeing that hit on time and slowly build up. So yeah, that's dope, bro. I love hearing all that, man. That's good stuff. Keep doing what you're doing, man.
Thanks. And it's like stacking bricks. Just keep stacking. And literally every spare dollar that I had went in the market. And with this fractional shares, I even put that dollar in. So my wife thinks I'm crazy, but I think it's crazy in a good way because I'm the saver. She's the spender, and we worked out a way that we both can coexist and do very well. And I think that's really important. Your spouse is your other part of your income generation, and that's powerful having two incomes and able to live off of one and save the rest. So it's a big thing.
Yeah, I agree, man. That's definitely a big thing. Got to definitely be on the same page and coexist. However, you got to do it, man. Yeah, you're killing it, bro. That's awesome. It's dope to hear you speak too for the first time, man. Good stuff. So, you talk like you've been doing this, so good job. Good job, man.
I study probably 2 3 hours every day, 7 days a week. Um, like I said, it's a motivator. Now I'm at a little bit different stage. I'm trying to figure out how do I protect it, how do I save it, how do I still make it grow, how do I still collect those dividends, what my balance is. I was old school and was always taught to diversify by individual stocks, and I bought VU right off the bat, and some SCHD because that's what everybody else was doing, and then I had 50 individual stocks at one time. Very diversified, but really hard to manage, hard to control, hard to research. Then the ETFs came out, and I started scaling. And then the high income ETFs came out. Now they got the weekly ETFs. My gosh, that's a lot of stuff, a lot of information, and we got John, giving us charts all the time. I appreciate that, John. Those charts are just awesome. It motivates me to go back and do my individual testing and my individual research, and then I get another idea, and then I research that against it and everything. But John, you're doing a great job motivating me with those charts.
Thank you, Pappy. I appreciate that, and congratulations on all the hard work you've put in the last few years getting yourself caught up. That's fantastic. Great job.
Thanks, I appreciate that.
Yeah, I agree, man. Good job on all that. And yeah, John, you're killing it with those charts, bro. You keep us all motivated with that for sure. Um, and yeah, I'd have to agree. Being diversified is good, but there's definitely over diversifying. And that's something I did when I first started investing too. So I had to scale that back for sure. So yeah, there's definitely a fine line in between of, diversifying and then overdoing it. You know what I'm saying? Because yeah, you can't catch everything, and you can't, it's harder to keep up with your portfolio when you got so many different things you got to, track and keep count of. So yeah, I've been working on that too myself even more. Just, have my account where I have the things that I ain't worried about. You know what I'm saying? Like, if I'm expecting it to go to zero, but if it don't, even better. And then building on the outside of that my main portfolio. So more structured and compounded. You know what I'm saying?
Yeah, it's a fine line. I'm now down to 62 positions. I was at 76. So, every week I target, two or three. Right now I'm going to take a little breather, a little break, and try to break it all down and things like that. But, I think there's ways to have ETFs and then have some strong stock positions surrounding it. Um, but a lot of them are carried in those ETFs. So, the debate is do I go, individual or just all ETF or a combination? So, a lot of research is going to been into it. A lot of research is going to get me out of it. I don't know what my magic number is. I'm thinking right now it's 50, but I'm at 62. I've got 12 more that are on a cutting block, but I don't know which ones I want to get rid of because I like them.
Well, if you like them, that's the key, right? I mean, I've been kind of cut mine down. I'm not that high, but yeah. I mean, if you like them and they've been paying off and they're growing or paying dividends, that's all that matters. I don't know if there's a magic number either way, but definitely hard to manage.
Yeah, that's why I've got to spend 2 or 3 hours every single day. I'm trying to cut that down so that I don't have to. But my major, positions like I bought Google and Amazon all the way down and doubled up on those two, so those are big chunks. And Microsoft, NVIDIA, ABGO, a lot of those players. But again, most all of those are already wrapped up into ETFs. So I might trim the positions down. I might scale them back and just reinvest the money into the ETFs to carry those positions, and then watch it grow from there. But they're part of my growth portfolio. They're not part of my dividend portfolio. But if I go to the QQQI or something else, they've got those holdings inside there. I can get a dividend on top of some growth. So right now I'm leaning towards that, just to simplify things.
Yeah, for sure. I mean, like I said, I've been trimming some things up. I hold a decent position of Verizon, and I talked on my own, profile last week about how I'm thinking about selling it because it's currently in SCHD, but SCHD reconstitutes so often that maybe they won't hold it all the time. And it pays a decent dividend, and the return on yield for me is decent, but the growth isn't there. And I think I could maybe just cut that individual holding and do something a little bit better. So I totally get what you're talking about. And I'm not in my 60s, but I'm getting closer to retirement. And I think I have hopefully 9, maybe 10 years. We'll see, though, based on the age of my child. Um, but yeah, as I get closer and I kind of eye that, I'm definitely trying to consolidate and get a little bit more stable. But I chuckle because I just started trading on margin, so I don't know how conservative I'm actually getting.
Yeah, I saw when you went on margin, I put my application in for the same thing, but I promised my wife I would never put her in a negative position, and when I had to go into big debt to try to save my business, my mindset was get completely out of debt. So I don't have any house payments. I don't have any car payments. Um, I'm just cash solvent, and I really like that. But $5,000 margin I can handle very easily, and I can do just what you did, is take the position BTCI or something like that, and buy it and get the interest or what have you, and make a little bit on top of it. It's just like carrying a little bit of debt with your business. You carry the debt so that you can make more money on top of it, but you'll make sure that you can manage that debt properly, and that's really what margin is. So I'm considering it. Um, I don't know necessarily that I need it or want it. I just like the idea. I go down to the dollar on my investments. Every single week. I don't have any money left to invest, and I've got a little bit in margin. I could go ahead and buy something that I feel is appropriate at the time, especially during the dip. Take advantage of it, and then when payday comes on, I can pay that margin off if I want to. So I think it's a great plan. Um, I don't know that I would be $300,000 in debt like some people that you see on X, that are on their way to their $1 million in dividends. But I can see some smaller margin accounts being extremely successful.
Yeah, when I did it, Fidelity, that's my brokerage firm, gave me the ability to use $300,000, and I just thought, why would I do that? So, I mean, like I've said, I'm using it. I'm using it to buy options and do covered calls, and but I'm still keeping it within a limit of something that um, I could immediately cover if needed. But now that I've done it, honestly, and I will 100% think and agree with Annie for this, I'm not actually worried about a margin call at the level I'm using it. Now that I fully understand it, because I learned by doing stuff versus watching people, my anxiety over a margin call is slim to none, just because I'm not, $300,000 into it or anything. I think I think I'm like total my portfolio. I'm at like 5% on margin, which is nothing, but I do see how it's amplified my growth and my ability to, as you just said, take advantage of some dips where maybe I didn't necessarily have immediate liquidity in my accounts, even though I may have it in a different account. I like just being able to buy it and then pay it off. And I won't say it's trading because it's not trading per se, but I've actually bought some stuff, held it for a couple days, sold it, took the profits, which pays off, the margin borrowed plus a little bit, waited for it to drop, done it again. So I'll call it mini trading. I've done that with two holdings and probably made now. I think it's been 3 weeks. Probably made $1,000 total in profit, which has been nice.
Yeah, I learned from Annie too, listening to Huss's podcast. You guys were talking about it, asking her questions, and he was nice enough to give a lot of information. Being a trader, actively pursuing those dollars, it made a whole lot of sense. So I went and researched it based off of what she was saying as well. So I just got my margin approved through Fidelity as well, and I'm just going to take it slow, and I'm probably going to do fairly similar to what you're doing. I'll buy some dips, hold it for a little while, and sell it, or buy some of the higher yielding things. But I'm just learning cover calls and puts. Paper trading, I've done 3 or 4, and I've done okay, but I plan on using it for that as well. So I've got a $5,000 margin that I'm going to be taking on, and just starting to move in a little bit different direction.
Yeah, it's fun. When done responsibly, it's fun.
Yeah, it's just getting started. There's the FOMO, fear of missing out, but also there's a fear of starting it because you don't know what the hell you're doing. So I don't get into anything that I'm not very confident in. That's just the way I roll. I need to know. I need to get more information. I need to practice. I need to understand it all. So, I Google a lot. I Grok a lot, Chat GPT a lot, and then I research a lot, right on top of it. So there's a lot of abbreviations you have to understand, a lot of things that you have to know, and options, and some cover calls to buy your stocks a little bit lower. Is a really good idea, and selling some, and making some capital on top of that. $1,000 reinvested the right way over the course of 10 or 15 years can be a whole lot of money.
Yeah, for sure. Yeah. I mean, I set out a goal for 2025 to try to increase my portfolio by $200,000 in a year. And I think, which for some people is very lofty, and for other accounts it's not. But I'm just trying to do me. I'm lagging behind on that goal a little bit, but I think I have to average $900 in profit a day for the rest of the year. So we'll see if I make it. But I think I will. I don't know. We'll see. But as you said, like I'm in retirement. Hopefully 9 years, maybe longer. So it should get easier every year. And if I can do that for 9 years, right, that's a substantial amount of money. So we'll see how it goes.
Yeah, my dividend tracker give me my projections for the next 15, 20 years, just with a small investment every single year, carry my dividends that I'm currently making, and then having those reinvested. And it grows really, really fast after you get to a larger number. So I was just kind of surprised. I kind of knew it was going to be up there, but I didn't know where it was going to be. You can do all the projections that you want, but reality is reality. Not every day you can invest what you think you might want to, and not every month you can invest what you want to. But when those dividends start to hit, I don't have to. I don't have to put another dime in the market to get where I need to be in 3 years. My dividends will just roll, and compounding on top of that, I'll get to my number in 3 years. But if I invest on top of that, I'll get there even faster, which means it's just going to compound even more. The numbers are real. The numbers are just kind of wild. I just encourage you to start and just continue to just pound it and pound it and pound it. And then every month, every week, or whatever, when you see those dividends hit, it is a motivator. Find your plan, find your way, stick to it, and you'll be very successful over the course of time. It's a great motivator.
Yeah, for sure. I mean, I just tell my coworkers that, quote unquote, don't have enough money to invest. That I still remember when I was doing like $50 a pay period, or $50 a month right after I bought my first house. And, that's what I was able to do based on my budget. And now I look back, 12, 15 years, and all of those little buys have added up. It added to everything else, just like you said.
Absolutely. And one thing on top of that, Poppy, is I don't know if you're using the Div Tracker or the Stock Events app. Which one are you using to or to watch your dividends?
Div tracker.
Okay, yeah, that's the one I use. I use all of them, but I like that one. But like you said, that doesn't account for you putting in money every however often you do. And usually, if you look at my dividends when I post them once a month, when I have like last year, the year before, I'm almost doubling every year from what I made in my dividends the previous year, the previous month. Like for June, it's doubling. So the projections, like you said, that's on these apps aren't even close to what it is once you put in your money every month on top of it. And after a few years, it really starts compounding. It's crazy. I just can't believe how much money I've made, and now it's compounding every month on top of itself. It's awesome.
Yeah, I've been fortunate to be able to put some large dollars in at a time. And once I do that, it just really took off exponentially. Again, I lost money up until 2018, but from 2018 to 2024, I've made a lot of money. But almost 100% of it's gone back into the market, all my extras. But once you get to a certain spot, the compounding is great. So even from last year to this year, just because I was able to put another large chunk in, my dividends have more than doubled. And if you get $5,000 in dividends, that's $10,000. If you get $50,000 in dividends, that's $100,000. That's just huge numbers. Doubling is doubling is doubling. Take everything that you can get, and if you can reinvest it 100% of it and not use it, you're compounding on top of your compounding, and that's when it really starts to hit. The magic starts to happen. So my kids are going to be very appreciative because I'm creating generational wealth, and that was one of my goals, was to not only be able to live off my dividends 100%, but to continue to have my portfolio grow without me having to touch any of the principal. So the numbers that I saw in 10 years, I'll be 72. I hope I'm around, but at 72 years, my dividends will have tripled from today, and my balance will have almost tripled from today, just in 10 years. So the rule of seven is thrown out the window when you get to be a certain amount of money, and the compounding is real. It is a fabulous thing to watch, and I'm kind of in awe, honestly. And I try to talk to my kids about what's going on and everything. They still don't understand. They really don't know where I'm at or where I'm going. But I'll be sitting down with them here pretty soon to lay out my plan and try to teach them what I've learned in the last 6 years. So in 6 years, 6 years ago, I had $32,000 in my investment account. I spent $500,000 getting my business going. That's where all of my money went, was to get my business going. So I invested in myself as opposed to the stock market, and I'm a firm believer of that you invest in yourself, and that was the biggest risk that I ever took. And the biggest risk that I ever took is the one that's paid off, to where I'm at right now. So, God has blessed me with this, but the first 10 years I lost money. My first 10 years I was a couple grand away from losing my house, from my car, getting a regular job, losing everything. And that was in 2008 to where I'm at now. And it just, even through the downtime, I threw $20, $25, $50, $10, every little bit that I could get. I still invested in the market because I knew that was a good future. But once I paid all my debts off, I paid my house off. That was $2,000 a month extra that I could put in the investments, and I put 100% of that. Increased my wife's 403b and doubled that. And every chance I had, we invested the money every single extra time. We put ourselves on a budget. We call it spending plan because budgets are restrictive. Spending is a positive thing. Um, we just couldn't live off of a budget. It was too restrictive, but we could sure live off a spending plan, and we followed that to a T. And 100% of every dollar on top of that went into investments. And it just doesn't take long when you're able to do certain things. So debt is an enemy. I understand it, but I've been debt free since 2018 when I paid off everything for my company, as well as my house and everything else. Once I hit that market and I didn't have that debt, 100% of everything extra went into investments. And I think it's just magic to watch the numbers grow. And you can start with a small amount and you're going to end up with a large amount at the end.
Hey man, I love that story, bro. That's very motivating. That's very motivating, for real. And yeah, that's like how I started too, man. Just a little bit at a time until you get yourself into a better position to add more to it. But yeah, man, that's what's up. I love that story, bro. That's what's up.
Yes, speaking C4 Poppy of generational wealth. I've talked about like my primary focus for dividends because I'm focused on growth for myself is I have a custodial account for my daughter who that she doesn't know about, and I've had it for 5 years, and she'll be 9. So on her 18th or 21st birthday or whatever, I'll finally tell her about it. Um, and that's kind of the way of my, like you said, passing on for your kids, trying to set her up for success, but not entitle her per se. Um, but yeah, definitely. Hopefully by then her dividend account will be substantial enough that she can save for retirement, but also have a huge jump start.
And that jump start's just the key for kids. I paid for my kids' college, and a lot of people said I was crazy, let them get student loans and things like that. But I wanted them to be in a better position coming out of school than every other kid that was out there. So they each had a paid off car and 100% of their college expenses paid for. And now they're creating their own wealth, they're creating their own lives. But I have a new grandbaby. He just turned 1, came to visit me last week. Hadn't seen him in a year, and just had a great time with him. But when he was born, I set up a 529 plan. And then, Mac, you'd mentioned a few times, your custodial account, things like that. So I started looking into that too because there's some alternative investments that you can make. 529 is just really basic. I think I'll end up keeping that, but I'm going to open up a custodial account for my grandson as well, and put some other funds in there and do exactly what you're doing for my grandson. So my kids will be taken care of, and I want my grandson to be taken care of by the time he's 18. My goal is for him, if he were to just let that money ride and not invest another dollar of it, that he'll probably be able to retire off of that when he's 55 or 60. So that's the goal. That's where the generational wealth comes in. Is I want my kids and my family to be better off than I was. Um, and that's been a very motivating factor for me as well.
Yeah, for sure. That's really honorable. Yeah.
I'm learning crypto now, Huss. I gave you the name of that one thing, and I'm reading about another one. And man, there's so much going on in the crypto world today. It's crazy. Um, it's a new law that was passed, and Circle and doing what it's doing, and you're talking about two or three of these other things cracking, and a few other places that might go IPO. Um, Uber wanting to accept uh, crypto. And I was thinking, maybe I should start accepting it in my business too. And I just laughed. I think, I don't even know hardly anything about it, but here I'm talking about accepting it.
Yeah, man. I didn't, man. As I've said before, I've mainly been in crypto this whole time, and it still trips me out till this day. You know what I'm saying? Of how much adoption we're getting and how it's getting utilized and everything. And that's what's been the motivator into going into some of the plays I have is because I'm seeing the adoption and everything, like that, like the Uber thing. You know what I'm saying? I was seeing those signs start to creep up, so I was like, you know what? Let me go ahead and do some more digging into all this, and yeah, that's how I started discovering those IPOs and shit. Is just following the signs, man, and yeah, I haven't got a chance to look. I just came off my work week. I was on the night shift, so when I'm on the nights, it's the roughest part of my week because it's like I got to sleep during the day and then I'm up all night. You know what I'm saying? So days start blending in together and all kinds of stuff. So, but no, I'm gonna look into that for sure for you because yeah, you definitely want to deep dive on especially new cryptos because you never know, who's behind them and stuff. But I'm very interested to see what's going on with that exact project that you sent me. Um, And yeah, I'll definitely be posting about it, and I'll hit you up too. And it's oh yeah, another thing is like what like starting off. Um, Coinbase is good, you know what I'm saying, so you can learn. It's more user friendly for beginners and stuff. So I wouldn't even worry about a cold storage right away. You know what I'm saying? I'd focus on just getting comfortable with it and just a little bit at a time. And I always recommend, just like people say in the stock market, you want to build stability first before you start, playing around too far out on, down the market cap lane. And start with Bitcoin would be like I look at that like the S&P 500 of crypto. Everything moves according to that. You know what I'm saying? If Bitcoin dips, altcoins are going to dip harder. But if Bitcoin goes up, altcoins are going to follow. You know what I'm saying? Well, some of them now. That's another thing, man. The market has been changing. People have been calling for this altcoin season forever, and it hasn't really hit. And that's because Bitcoin's, that Bitcoin dominance is, keeps going up more than it ever has because of all the adoption and all the what do you call all the people buying these reserves and companies all doing the same thing. You know what I'm saying? So it's like people are focusing more on Bitcoin longer than in the past. So this altcoin season thing has been rendered for sure. But yeah, man, I love crypto, bro. Crypto's something that like, you wake up one day and you could all it takes is one, bro, and it can change your whole perspective on investing and everything. You know what I'm saying? Because yeah, I've made a lot in crypto, and that's what I love about the ETFs and stocks is because now I'm learning, like you said earlier, preserving. You know what I'm saying? When I first started investing, I didn't know how to preserve. You know what I'm saying? So a lot of those gains just went back into the market, and some got I was smart and put back into Bitcoin, but I'd have a lot more if I'd have knew about ETFs and stuff at certain points of my crypto life. You know what I'm saying? Because I'd have took those gains and just let it all compound, with the dividends and everything. So yeah, nowadays I'm focusing more on the dividends. You know what I'm saying? And trying to build that, like you said, generational wealth and all that stuff. Because yeah, those dividends they hit different when you start seeing that accumulate and compound for sure. Um, the closest you get to with that with crypto is staking. You can stake certain crypto projects, but even that can get sketchy depending on what you're using. So you just got to do your research on everything.
Yeah, I appreciate that. Like I said, it's just the area that I just have an interest in learning more about because obviously with all the new adoption and everything, the more you understand it, the easier it is for you to make decisions.
Yes, sir. I 100% agree, man. The more you know, the better. And I don't know if I told you if you heard in the last space, but well, another thing I like about Coinbase is you can do like these quizzes, and they're very simple, man. And even like it even gives you multiple times to get it right, and still you earn the crypto. So like before you even put real money into it, you can dabble around and just use the free money you earn on there and see what you can get. You know what I'm saying? To learn a little bit, teach yourself, how to send, receive, how to swap certain cryptos into other ones, and all that stuff. Just simple things. Um, because yeah, like you said, man, I think it's important to learn as much as you can before you dive fully, and especially with crypto, man, because crypto, the stock market gets volatile, but like crypto's like triple that. You know what I'm saying? And that's why like when I stepped into the stock market and ETF market, like the volatility here is like nothing. You know what I'm saying? Like I'm numb to it. Like a little 5-10% dip really don't bother me. It's like people hit me up like with certain investments I'm in, like, oh, you see it's down like 3-4%. I'm like, yeah, dog. That ain't nothing, bro. I've seen projects I had racks in go from up 50% to negative 80. You know what I'm saying? Like, man, I've seen some volatility. You know what I'm saying? So it's like it built up a structure to step into the stock market with. You know what I'm saying? So it's like you know, I can handle the volatility in multiple realms of investing because of crypto. You know.